trust your crypto assets to centralized exchanges that actively sell your private information and front run your trades? Would you like to buy and sell your assets without any middlemen, intermediaries, or robots? Do you like paying slippage, fees, and having the price go up as bots steal from you on low liquidity decentralized exchanges? The solution is nodemarket.io. Set your guaranteed buy or sell price. No middlemen, no slippage, no bots, ever. Buy or sell 1, 10, or even 10 million tokens, and you never have to worry. OTC trades are between you and the seller or buyer, guaranteed by audited smart contracts and no human middlemen. Nodemarket.io.
All right, we can get it going. I should be getting a new desk. I'm very excited. I'm very excited about my new desk that I might get. Hold on, where's my thing? Yeah, I'm getting a new desk. It's a bigger desk. Holds more stuff, so I can spread out all my stuff. But I don't have this desk. Not yet. So we wait. We wait for this desk. I tell you what I did get. Screwed by Amazon. I ordered the camera, another camera, because this one's pretty old. This is like from the Raging Bull days camera. And I ordered, like a real simple like camera that should be better than this one. And I got you have to get a dummy battery because the batteries only last for like 45 minutes. You have to get a dummy battery and a little power transformer. And they, when you buy something on Amazon and they package it like this goes with this. So I bought it. Wrong one. And it's the top selling camera of those little podcast cameras, meaning I'm betting 9 out of 10 people are getting effed by Amazon. And the problem is it's like $31, which is not really enough to go through the trouble of sending it back. So the only weapon you have is a 1-star review. Yep. I 1-starred those mofos. Because that's bullcrap. They know they're doing it. And they make it very difficult to send it when you buy in a bundle, a bunch of stuff. They make it incredibly difficult to return it when it's crap. So that's Amazon and that company knowingly screwing people, knowingly doing it every single day on the top selling camera and just, ugh. Elizabeth Warren runs that company. Anyway, that's it. That's all I got. That's all the rant I got in me. All right, Hypercycle have gone from under 50 cents to about 53 in the last few days. I think it's 54, actually. Let's see. Let's see. Oh, did it go down? Is it going up? Is it going down? What is it? Bitcoin's there. Oh, it was higher. It must have just gotten nuked. Oh, okay. Yeah, it's just so low liquid. Yeah, I mean, a few minutes ago, it was like 55 cents almost. So it's, but see, the thing is, look at the tiny volume. None, 200K. That's nothing, dude. And it's at 53 cents, which is a little weird. So the price is kind of sloppy reporting. But anyway, yeah, 53, 3, 54. Low liquid though. It's hard to get an idea of an asset's value. Well, value's an indescribable term. It's hard to get an idea of an asset's realistic price when it's so illiquid. So that's tricky. So anyway, not to focus on price, but we are going to talk about basic terminology today, which will be fun because I think it's lacking, and we don't want to be we don't want to be fintarded or fintarded. Yeah, fintarded. We don't want to be fintards. You don't want to be that uncle at the table. You don't want to be that guy. So we're going to make sure today we're going to make sure we're not that guy, and we'll answer some questions. Put a cat bed on the desk. No, it's not that big. But it is a cool desk. It's like a big wood, wood colored desk. I don't know what the material is. I haven't quite identified that. It was pretty inexpensive on Amazon. It was less than the food I ate yesterday. So I'm guessing it's probably not of the highest quality. I just needed something a little bit bigger because I want to be able to push the camera back and then like get more. I need more cowbell. That's what it is. All right. Okay. Let's see. Amazon doesn't, I know. They screw everyone. Yeah, and AWS is where they make all their money. So you're right. Let's see. Good morning. Mm-hmm. You were warned. That's right. So pretty good day. And yeah, somebody, who was it? Was it Craig? Who was it? Or Chris or somebody had said one of the 17 days. Whoever said that? Let me see if I can find that comment. Probably yesterday and today was one of the 17 days. Because we talk about it a little bit in that if you look at a bull market, there's only about 17 big days per year. Well, and again, we've only had, a few years of data in the crypto space. It's not like we have 100 years to look at, but, pretty much there's about 17 days, big days. And I would say based on what we saw yesterday, and again, on rumors. And so two guys from Eric Balkunis and this other guy who they seem to have a pretty good pulse on what's going on. I'm not a hater. They seem pretty cool. They said they thought that the chances of a Ethereum ETF was up around 75% from 25%. Now, this is two people randomly guessing percentages based on scuttlebutt, bathroom talk, like based on nothing. But essentially, their theory is that because the SEC asked for a bunch of amendments, and that was similar to what happened with the Bitcoin ETF, the SEC asked for the filers to do a bunch of little amendments to their filings, then it's more likely that there's been some kind of, emotional pivot in the mind of the SEC. This got to be making Michael Saylor pissed. It wasn't even a month ago he said there will never be another ETF in crypto. What do you mean never? That did not age well. Like his skin. He needs lotions. That guy needs a lot of lotion. He needs all the lotion. If you guys could send him lotion, his face would just absorb it all. Anyway, but so these guys posit, I think they're on Bloomberg, and then they posit that, well, the Ethereum ETF has a much higher likelihood because the SEC is reaching out and saying make these amendments. And the last time they did that, they went ahead and passed through 10 or 11 of these ETFs. That was January 10th of this year. I'm a bit dubious that is enough for me to get excited, but I do like the prices of everything going up. And then on the other side of it, I don't like the prices of everything going up because I can't invest. So now I'm just taking gains into stablecoin and waiting. And so that's what I do a lot of times when things just kind of are difficult to figure. Not only did Janet say there's no inflation, remember when Janet Yellen said there would never be another recession. Never be another recession. Okay, so the business cycles, Janet, because of the amazing scholarship and body of work that the Federal Reserve and the Treasury have accomplished. Well, you've got the tools so that there'll never be another recession. Wow. What a dick. Well, she wasn't, it wasn't just Elizabeth Warren. It was Janet Yellen. Janet Yellen, Treasury Secretary. I think they all got on the no more, we've mastered the weather, bandwagon. But anyway, Elizabeth Warren, I think her time is coming to an end. I mean, I don't mean it like that, like the Grim Reaper, although that too. But, oh, no. Don't worry. Elizabeth has said plenty of dumb things. So I don't know, man. I still don't kind of buy into the Ethereum story yet. I mean, just the fact that they've asked for amendments, I don't even know what that means. And they're not going to, well, I'm not going to say they're not going to do anything because they could do whatever they want. It's clear that this is now a political game. I'm guessing that someone in the Biden administration got a meeting with old Joe and said, hey, buddy, you're pushing a lot of potential voters to the other side with this whole crypto war that you don't need to fight. It's not like if he had said nothing, it wouldn't have made it. It's a no-win scenario for him, but it's also a no-lose scenario if he just keeps his mouth shut. If he keeps his mouth shut and lets, the Constitution carry forth like what it's supposed to do, then nothing happens. Like, okay, great. These guys repealed this thing that shouldn't have been a thing. Just for reference for those of you that don't know what I'm talking about. The SEC slipped in a sketchy little footnote that created a kind of half-ass law, which is illegal. You can't do that. The SEC is not a law-making body. They're an enforcement agency. They enforce. They don't create laws. You don't create laws as an enforcement agency. The FBI doesn't make laws while they go and serve warrants. Congress makes laws. So when the SEC did this, and it was discovered by some people in Congress, and they said, this is very sketchy. We are going to repeal it. And they voted, and it was a super majority too. It wasn't like 21 to 22. Oh, we barely. It was both sides, bipartisan. This is effed up. I think Elizabeth Warren may be the only person, her and her like little friends that go play stupid softball. Everybody else said, yeah, this is illegal. This violates the whole purpose of why we have a legislative branch. So Biden then puts out a little memo that says, well, if it gets to my desk, I'm going to veto it. And then people are like, what are you going to veto? You're going to veto the thing that says that the Constitution has effect, and that when it gets perverted, we step on that perversion. You're going to veto that? Like, it was very dumb, and he didn't need to say anything. Just keep quiet. So, I don't know. So but what happened is he angered a bunch of people with a lot of money. And I'm sure someone was like, hey, on this one, we gotta have a mulligan. We need to reconsider our stance. So this has all become very politicized. And now, I think everything from here forward, every Fed decision, anything. Let me tell you this. You think that the Fed will finally come around before sometime between now and the election and just decide it's time to cut rates? Like, now's the time? Come on, man. Anyway, God. So it's just a lot of nonsense. But that's the world we live in. So we have to arbitrage that. We have to arbitrage the idiots. We are always doing a kind of intellectual arbitrage. And then in the markets, you have like the simple arbitrage, math arbitrage. This thing is $3. I feel like it should be $9. I'm going to get it for $3. I'm going to sell it on the way up. Yay. And as long as we can front run group think, front run Joe Sixpack, who is more consumed with, housewives of, Houston or whatever, rather than, she or they would rather squander their time watching fake reality. They would rather use their life to watch someone else's fake life. How weird is that? Man. Anyway, yep. So it's easy to be better than those people. And then we have this idea of compounding ideas over time, like compound decision theory, making slightly better decisions a whole bunch over and over and over and over, and rising above your peers. And so you start doing these things, you start implementing game theory, paying attention to your own cognitive biases, and then pretty soon you're just, even on a bad day, you're making better decisions than all of the people around you. That's all you need to do, is make slightly better decisions than all of the dummies that surround you. And in not too long of a time, you just melt above them, and that's it. You're gone. You're in hyperspace. And they are not. They work, and you do not. Well, you work. You have your own kind of work. The Hypershare Creation Wizards deployment is in its final internal testing phase. So gear up and get ready to get married. Yeah. Is it? Did they put something out about that? That would be cool. I know that they've been testing that. So that's good. And finally, well, at least Ethereum fees aren't as nasty as they usually are. They weren't great yesterday. They were kind of crazy yesterday, but we'll see. We'll see when Ethereum's, $7,900, what those fees look like. No, it's the blockchain of the future. Let's see. As Dr. Hofstetler told Penny, her locus of focus is outside of herself. Watching reality shows. Yeah, I know, it's weird, right? I've just never gotten into that. Let's see. Saw that copied into Cryptopia from X. Tweet from Hypercycle. I am not involved in internal testing. We're building something else. We, as in Brandon and the team of devs that he manages, are building something else. We are building something we think is easier to use. Not better, mind you, just easier and cheaper. Does that make it better? I don't know. Maybe. When marriage starts to happen, you're going to see some crazy things with that token. I can tell you that, man. Okay. If you have any questions, shoot your questions. If not, we can get into our finance speak. We can look at the markets real quick, but again, I'm not going to get into any investment decision-y, anything like that. That's all stuff we would have done behind the wall, but Tuesdays and Thursdays this is our public outreach, unless I curse. If I start cursing, if I start getting foul-mouthed and nasty, we nuke the video. I think we had to nuke one last week. We had to nuke Thursdays last week. So I got very saucy. I don't know why I was so saucy that day. Anyway, let's take a look at markets. So we got the, why does it show Ethereum at 31? That's not accurate. Yeah, gosh, come on, man. Let's get back to basics. There we go. Okay, so the Ethereum, that was kind of the story of the day. Why does it show that market? Hold on, this thing's not updating so good. Oh, God. What a weird, there, maybe. Okay, yeah, 2.6, that's what I thought. Yep, so my contention has always been we're not in a bull market until we hit 3 trillion. I don't see how we could be, because that was the last top of the bull market. So until we get back there, Are we in a bull market? I don't know. So yeah, but here's where we sit. Now we were quite a bit higher about a few hours ago, but I'm not sure why Bitcoin, I mean, I guess it was just general enthusiasm. I'm not sure why Bitcoin ran the way it ran yesterday. I mean, this to me is an Ethereum story. But hey, I'm not hating. I like being, a few K away from the all-time high. My guess is this is a trend. If this is an if we do get an Ethereum ETF that passes muster, then you're going to see, I think you're going to see Bitcoin really run. I feel like this was the last big news event that we were all waiting for. And in my mind, I was thinking August at the very end, because the SEC typically delays, kicks the can. And at the final point of being sued and losing in court, because what the SEC does is lose in court. That's what the SEC stands for. Lose in court. So I figured they would just exhaust all of their, time delays and then pass through all the ETFs, just like they did with the Bitcoin ETF on January 10th, because that had been going for many, many, many months. So if the Ethereum one passes, you can expect all sorts of things. I don't imagine there's a scenario where it wouldn't eventually take out its highs, as well as, and you might see that all on the same day or the same couple of days. I'm not telling anyone to do anything. I'm just going to watch. I'm not doing anything with either of these assets. Bitcoin's not high enough for me to consider selling it. It's not low enough for me to consider buying it. Ethereum, I mean, even if the potential is 10,000, I don't know if this is, I don't know if at this point, I mean, yesterday or a few days ago, probably the place to play it, at 2,950 or 3,000 or even 3,100. I don't know, sitting almost 3,800, if that's the right call. I don't know. I'm undecided. Let me get my little thing here. Oh, there we go. Get the B. Get that B. But could you see Ethereum get $1 trillion market cap? I surmise yes. But it would we'd have to be around 8,000 and change. You say, wow, it's a double. That's amazing. Yeah, but there's a lot of other assets that I think will get there first. Cardano, I'm interested in. I was going to DC dollar cost average into some Cardano, and I got left behind. I got left behind by some pennies, by about, I think it was at 45 cents. And I thought, it's going to start to look good again. And then, so when you see these up days, you feel good. Your portfolio looks good. Your NAV, right? But then you go, oh crap, I can't buy anything. Other things that I thought were interesting. I thought it was interesting that Matic didn't move all that much and Optimism did. Isn't that interesting? Both layer twos, both should have experienced some kind of boon from the, what's not really Ethereum news, the not bad news Ethereum news. So yeah, there we go. Fetch up, Uniswap up. That makes sense. Although I don't know why it makes sense this much. I mean, I know that people use Uniswap and Uniswap is awesome, but the token has nothing to do with the efficacy or utility of Uniswap, and they're still in court. So I don't know, man. Or maybe it's the other way. Maybe it's not a bet on, maybe the whole idea is that by the transitive property, if the Ethereum ETF were to be greenlit, that's the SEC saying Ethereum's clearly not a security. Ergo, the case against Uniswap's probably not accurate. Yeah. So then that Wells notice would just disappear and die. Yeah, I mean, Optimism, I thought that was very interesting. AGIX over $1, woo woo. Ocean over $1, woo woo. Fetch 250. Yeah. I mean, we could, hey Siri, what is 1.05 divided by 2.5? So we're still at 0.42 is the ratio. So you still wouldn't, for those of you that are looking to the best way to get into the ASI coin, it's still yet is not worth it to sell. Again, if you're just going to hold and wait, you just hold and wait. Don't sell AGIX and buy fetch, just hold and wait, because unless you're getting a ratio of around of let's say 0.44, it doesn't do any good. You'd be better off just to sit and wait. You'll make 5 or 6% just by doing nothing and then using whatever bridge function that they come up with. Oh, interestingly, I chatted with Dr. Gortzel over the weekend. We chatted a few times, and I talked to Tufi a lot. We had a lot of conversations. It's been a busy few weeks. But anyway, so there's a lot of progress being made on a lot of the joint ventures around Hypercycle, and the I don't know about, I can't speak for the fetch team, but I know that Ben is excited about leveraging Hypercycle. It's not just lip address. It may have been at first, but it seems like now that they're very interested in using Hypercycle to expand the reach of their compute resources, which again are limited when you compare them to fighting the battle that they're going to fight. So, because it's tough to compete with the likes of OpenAI and Microsoft and Google and everybody else who I mean, just Anthropic. Anthropic's massive. So, yeah. So it's good to hear that the SNet crew is, by hook or crook, at least interested in leveraging Hypercycle to a high degree. So that's good. Okay. What else do we got? Oh, we got a confirmation bias. So let's see. Question about merging Hypercycle nodes in the node manager. You can't merge them. You can't merge them unless they're part of the same master node. So just what's the purpose? The purpose would be if somebody wanted to streamline the effort, if they had a 2 and a 4 and they just wanted to have, one thing to mess with rather than 2 things to mess with. But I don't think you need to do that. You're just going to click a button and point it probably at a pool anyway. Most people are not going to be picking their algorithms and all that kind of crap. So yeah, I hope that helps. Let's see. So how do we have 117 up days when we have not yet entered into a bull market? Well, because probably we'll look back, and once we have surpassed that and we go throughout the year, we'll look, because remember, at any point, like looking at the prices now, going back into the past, you can kind of get like, oh, well, that was really worth this. You can do these kind of weird mental, gymnastics. And also, my definition of a bull market is not an industry definition of a bull market. Everybody's saying we're in a bull market. And this is definitely one of the 17 days that you would probably get. And these are all different, and those are also averages over 3 pretty substantial bull markets, mostly in and around Bitcoin. But days like today are pretty random. Isn't it funny when all of this is the other thing I noticed, Arweave. Remember I told you, I felt like the behavior of Arweave was not organic, inorganic, or suspicious. I thought there was some tomfoolery going on. Some skullduggery, perhaps. It just didn't make any sense to me. And this thing went up to like 49. And then when Ethereum gets the pop, it starts selling off and everything else is going up. Is that because people are taking profit and going to other assets? Maybe. Just looks weird that's the one red animal on the sheet. Anyway, it's weird. Okay. You should put a foul mouth warning on your rants. Oh, yeah. I don't know, man. I'm trying to clean up my vocabulary. No one likes the rant. Why? Well, you already know this because of the Ethereum ETF potential. Today's cognitive bias, confirmation, which, gosh, this is the main one, confirmation bias. The tendency toward confirming our existing beliefs and testing ideas in a one-sided manner, only paying attention to items consistent with their hypothesis. You know, looking through news articles and only reading the ones that support the beliefs that you already hold. That is not science. If you choose not to decide, you still made a choice. That's right. What is that? They said that in Jackass the movie. Failure to prepare is preparing to fail. One of those kind of palindrome type statements. Okay. Let me see. If my only serious question had been answered yesterday, it would have saved me approximately 10% on my DCA purchases. I blame Brandon. Well, Brandon is to blame, Howard. And the best way to let him know that is with a bunch of emails. And maybe in each email, like 1 or 2 words, but not the full bulk of the email, because his curiosity will get the best of him and he'll have to click through every email. I think that's the best way we teach him a lesson. Lots of emails. Let's see. Well, yes, these are all moving in lockstep because they promised a ratio of exchange. Once you promise a ratio of exchange, any other anomalies would be arbitraged out. Again, assuming that those people may intend to stay in the ecosystem. So, yes. Okay. Let me look. Let me see if we're missing anything. Otherwise, we'll get into our stuff. How do you know which masternode licenses are in? Unless you bought them in quick succession, they're probably not in the same masternode. Remember, a masternode has how many? Everyone, quick Q&A. How many licenses are in a masternode for Hypercycle? Anyone? 512. Bam. Nailed it. Yes. Awesome. See, now you guys are smart. I guess you were smart the whole time. You just chose to be quiet. Let's see. It is true. It's always Brandon's fault. 2 cats. She claims, it's defined by cats. Well, then I know this homeless guy down the street who is probably a superhero then, because he's got like 6 cats, I think. Although I think one of them is a raccoon and he doesn't see too well. That's a whole other thing. Anyway, yeah. Okay, so unless you bought your licenses in a very short succession of time, like you bought one and then a few minutes later or a day later you bought one, it's unlikely that they're in the same 512 node licenses, right? Does that make sense? It's unlikely that they're together. So, okay. Other than that, I didn't see anything super exciting going on, other than some whimsical news. Now, what it may have presented for some people, it may have presented some opportunities to move assets around that maybe they were uncomfortable holding. So that might be one way to kind of look at the world. Days like this, if you are shuffling stuff around, like I've been taking my staking rewards from Fetch about every couple of days, every 2 or 3 days, and I push them over to Kraken and I just sell them into USDT and just sit and wait and sit and wait. And I was sitting and waiting for a denial. So I'm going to have to consider over the next few days if I have to change that strategy a little bit. So I usually don't just make a quick decision on these kind of things, but my strategy as of late has been sell staking rewards into USDC or USDT and redeploy in some of the other assets that I like that I think have not kept pace or were overly punished Because remember, just not even a week ago, just 3 or 4 days ago, the entire market was getting punished. We were, and everybody was like, oh, woe is me. And then here you go. A few days later, we're right back up near the all-time highs and everybody's happy again. So ain't that funny? Okay. So there we go. All right. If there are no further questions, Your Honor, we're going to have to go into our classroom session. Let's see, what music are we going to play for a classroom session? This is interesting. There's a lot going on.
Hello. You're late.
You're bad at math, but I'm giving you an A+ in confidence.
Just doing what I gotta do.
Extra credit.
Okay. And I will watch comments if something interesting pops up. Let's see. No. Let's see for Nick. Coffee tip. Go on with your tips. Lee's Vietnamese as a creamer in your coffee. Interesting. Or use the Nespresso pod for espresso and use a little shot of Lee's. A little shot of Lee's. Today, this one is called Sunday, but DAE. Oh yeah. That's the good stuff. It's not as good as yesterday. Yesterday was real good. This one's okay. It's not bad though. All right. If SingularityNet is screwing up so badly, how can you feel so confident with Hypercycle? Because Hypercycle is not a SingularityNet project. And I don't think SingularityNet is, I don't know what SingularityNet is. I guess my opinion is I hope they pull it together. Obviously, I own AGIX, still lots of it. So, and Fetch. So I hope those two create something cool. Or even though they're not really working together exactly, it's kind of, it's hard to figure out exactly what this is. But Hypercycle and also Twin protocol, those are not part of SingularityNet. They are partners, right? They have contributions, but what they don't have, from the SingularityNet team, but what they don't have is SingularityNet's not the boss. You're not the boss of me. Whereas these other, they're not a spinoff. Like Rejuve is a spinoff, and Krabgito is a spinoff, and NewNet is a spinoff. Singularity DAO is a spinoff. You have all these spinoffs. Sophia, spinoff. Twin Protocol and Hypercycle are not spinoffs. They are partners, and that's just a big difference. There you go. Okay. Let's get back to some terminology. So I hear sometimes people kind of, let's say butchering, but maybe they hear things, they don't have a firm grasp. So I want to make sure that just with the very basics, we're going to dive into the most fundamental economic and financial terms. And it's important to understand, I know you're like legacy finance, squishy sound as your eyes roll, but you need to understand both traditional finance and the kind of Web3 digital finance world, because if you're managing money wisely, right? Or perhaps you're going to get to a point where managing money is the main thing you do. And guess what that is? That's a career in finance, whether you want to admit it or not. You're just creating yourself a career in finance. So, you can be a competent fiduciary, you can be a competent money manager, and this can turn into, because again, selling your hours to someone else, at a certain point, your investments ideally would have grown to the point where your time is better spent managing your currency units. That, my friends, is a career in finance, whether you like it or not. So these concepts are essential, and you need to drill down on them, and you need to know them as well as all the people on your Real Housewives show that you watch, or the rules of like football, except for the recent rules that we're not sure what a catch is still after 4 years. We don't know what a effing catch is in football. But He's gotta make like anyway. So we're gonna start with the basics, and then we'll flow into the digital finance terms. But basically, we are all trying to grasp economics, right? The study of how people use resources to satisfy their needs and wants. And it's divided basically into microeconomics, which is individuals and businesses, and macroeconomics, entire economies. So, the study of how people use resources to satisfy their needs. This is what you want to know. And you could add one little caveat. You could say how people use scarce resources, right? Because that makes a big difference. The little bit about scarcity. So that's economics. So then we have macro and micro. Big E, little e, right? Big E, macro, which is entire economies. Little e, individuals and businesses. And that's where your supply and demand curves come from. Great. I just saved you having to take a 5-hour course at college. All right. 2, supply and demand. The relationship between how much of a good or service is available. And again, we're assuming that all resources are somewhat scarce. For instance, you say, well, oxygen, that's not scarce. It is if you're underwater. So the situation dictates, right? Or if you're in space. Yeah, or good air. Anyway, supply and demand is the relationship between how much of a good or service is available, which is supply, and how much people want it, which is demand. Prices typically rise when demand is higher than supply, and it falls when supply exceeds demand. And what does that describe? Everything that just happened during COVID. Prices typically rise when demand is higher than supply, because of supply shock, and fall when supply exceeds demand, because producers and manufacturers continue to produce and manufacture well past COVID, and now supplies exceed demand. We're getting into a deflationary space, which is gross. Anyway, let's talk inflation. This is the always and everywhere monetary phenomenon, right? But if you were to ask an economist at 3 a.m., what's inflation? He's like, it's the rate at which the general level of prices for goods and services rises. Inflation erodes purchasing power. Now, notice I said the rate, not the price. When things go up in price, you have to determine, is this inflation or is this some, weird mixture or melange of political forces, supply imbalances, shocks in the system, logistical problems. And the reason why you need it's a distinction with the difference, because it's like what kind of fire you're putting out. A chemical fire you put out different than electrical fire. You put out different than a wood fire burning in the forest. Those are all different. You treat those differently. Inflation's like that. So when you see prices go up, you just say, oh, it's inflation. No, it's not. It's not always inflation. You can have debasement effects that create the erosion of purchasing power because it debases or devalues the currency. You can have that always and everywhere monetary phenomenon of inflation because of the printing of too many currency units or the extension of too much credit and free-flowing cash into society, and too many currency units chasing too few goods. Or you can have some people in the Middle East just say, F you, we're jacking up the price of oil because no one's buying it. And then prices go up. Those are distinctly different. So the way you treat these things, prices go up and prices go down, it doesn't always mean inflation and deflation. So just make sure that speaking of, I got some Fruit Loops. Has anybody bought a box of Fruit Loops lately? The loops are like this big now. They're like little bitty ball. They're like little bitty O's. They're like SpaghettiOs. That's how they used to be big. You used to be able to not fit like more than 4 or 5 colorful, fruity, delicious Fruit Loops on a spoon. And now you could put 100 on there. They're like BBs. It was really underwhelming. I got some Fruit Loops. I haven't had them in years, since before COVID. Shrinkflation, mofos. Shrinkflation. And the box is like this big. It's 10.9 ounces. What the crap is that? Yeah, that's shrinkflation like a mofo. Anyway, that's another kind. Anyway, but inflation, the rate at which the general level of prices for goods and services rises, it's the rate, right? Inflation isn't the outcome, it's the rate at which it changes. And inflation is always and everywhere the monetary phenomenon. So how are such things measured? Well, GDP, gross domestic product. This is the total value of all goods and services produced within a country in a specified time period. It's kind of a measure of economic health, temperature check, right? But GDP is usually heavily influenced by a few things. And those few things, like, government spending, is just a switch that can be turned in one direction or other whenever. And that gets into a whole other discussion of like, can you cook the books for GDP? Well, of course you can. Chinese have done it for decades. You just build buildings into nowhere. You just build whole cities of nothing. And then you pay someone to manage those cities. You pay someone to dig a hole, you pay someone else to fill it. That's GDP. So that's an onion that you have to peel back the layers to really understand it. Let's talk interest rates. The cost of borrowing money, usually expressed as a percentage of the amount borrowed. Hopefully, none of you are affected by this because none of you are borrowing anything. But lower interest rates, this is the theory, is that lower interest rates encourage borrowing and spending, while higher rates reduce inflation and slow down the economy. Now, again, this is textbook economics. Let's dig into this a little bit. Lower interest rates don't encourage borrowing. What they do is they take away all of the reasons you would say no, especially as a business. Now, if you were waiting to make a big purchase and interest rates keep going up, it's unlikely that you will put off the purchase unless interest rates get to a point where the debt service is so big, so harrowing that you just go, oh, I'm not doing it. When it gets disgusting. That's all relative too. Because you look back and, there were times where people were buying things at just exorbitant rates because they believed the future was going to be prosperous, right? Low interest rate environment is not a good environment, right? Low interest rates, that means that the people in the money business, that's all they do. They believe we're in a low growth and low inflation expectation environment, right? That's the yield curve. It's a look into people's assumption of growth and inflation expectations. And a sloping curve up and to the right is very healthy. And when you have a low interest rate environment, it's because there's problems in the economy. Because in order for there to be low rates, that means people are willing to give their money to the government and receive a tiny rate rather than going out into the economy and investing and spending. So when you see a low interest rate environment, it's not a sign of good things. It means people are not investing. It means people have stepped back. It's a sign of bad things. It's the interest rate fallacy. So high rates, do they reduce inflation? How could they? There's zero, it's probably less than zero correlation between higher interest rates. Will higher interest rates curtail spending? To some extent, but does anybody here not buy milk because you saw the yield curve at 5.55% and the month before it was 5.2%? You're like, well, 5.5%, I'm not buying this milk. I just won't do it. What? It's like, no. Right? So higher or lower rates to lenders is not going to reduce, well, it just doesn't. It just doesn't. So those kinds of arguments are pretty silly, and there's just no support for those arguments. So you have to be very careful. Now, if you were to raise rates unnaturally, because again, you don't really need a central bank to raise rates. The markets will raise and lower rates based on growth and inflation expectations. You don't need arbitrary, government fintards adjusting inflation rates while looking in a rearview mirror and all this kind of stuff. It just there's just very low or little or no correlation between that. And again, a higher interest rate environment is typically a healthier environment if it's natural. Again, unnatural rates for interest rates, that throws everything into a weird kind of state of fakeness where no one really knows what's going on. Anyway, let's talk stocks. Shares of ownership in a company. And that gets us into the discussion of the capital stack. But if you have shares in the ownership of a company, when you buy a stock, right? When you buy a share of a stock, you become kind of a part owner of that company, and you can earn dividends or sell the stock for a profit if its value increases, sell it for a loss, write off the loss if the profit goes down. But essentially, there is the capital stack. And as an equity holder, you are at the lowest tier of the capital stack, right? Senior debt, junior debt, preferred stock, common shares. And the saying, the old funny saying is like, shares of a company means you're first in line for dividends, last in line at liquidation. So if that company goes under, you got nothing. But you get some dividends, hopefully, unless the company does a giant buyback like Apple's doing right now, the most unprecedented buyback in the history of history. What, 110 billion, something like that? Whew. Anyway, bonds. Loans made to a company or government in exchange for regular interest payments plus the return of the bond's face value when it matures, right? Now remember, as interest rates go up, the face value of the bond goes down. They're inversely proportionate, right? Why? Well, if you think about it like this, if a bond is $10 and it pays 3%, you're like, nah, I'm not giving you $10 for 3%. They say, well, what if we gave you 4? No. What if we gave you 5? I'm thinking about it. What if we gave you 6? I'll do it. So now that bond's face value is less, but it's paying, it had to pay a higher rate to entice you to come buy it, to come participate, to loan money, either to that company or to that government. So that's there's an inverse proportionate relationship to the bonds, the face value, and the interest rate. And sometimes they're fixed and sometimes they float around, and sometimes they're inflation adjusted like tips. And there's all kinds of different bonds. There's bills, notes, and bonds. Bills are at the short end of the curve. Notes are in the middle. Bonds are at the tail end of the curve, the longer time horizon. And that's the whole kind of skew of government debt, all those different maturities. You have a similar but not the same structure for company or corporate debt. Okay, mutual funds, investment programs funded by shareholders that trade in diversified holdings and are professionally or robot managed. Mutual funds have all sorts of rules as to how much of each asset the fund can own. It's usually around 3%. You can't own more than 3% of any one specific asset. That's a mutual fund, not a hedge fund. Hedge fund, they can go nutty. Mutual funds have rules. Okay, portfolio. What is your portfolio? Well, that's easy. That's a collection of your financial investments, stocks, bonds, cryptos, commodities, cash equivalents, managed by an individual, a fiduciary perhaps, or a financial institution, or some cool technology, or you. Maybe it's you. Risk and return. Well, the relationship between the potential risk a person takes with an investment and the potential reward one should derive from those investments. Higher returns come with higher risks. So typically, in a higher risk environment, one must have a higher risk tolerance, or they will not do good in that, and they will lose sleep, and they'll be miserable, and they'll want to sell stuff. And usually they would buy at the highs and sell at the lows. And that is the business of business. All right. So as we transition to digital finance, obviously it gets a lot easier because these are terms that you guys are more familiar with. Cryptocurrency. You could also think of it as cryptographically secured assets. These are digital or virtual currencies or assets that use cryptographic proofs or cryptography for their security. Bitcoin is the most well-known cryptocurrency, right? It's also proof of work. That is the consensus mechanism. All right. What is a blockchain? Not all crypto assets are blockchain based. Some of them are, but it is a decentralized digital ledger that records transactions across many computers so that the record cannot be altered retroactively, right? If everybody's got a copy of your checkbook, you can't go write you can't go bounce a check because everybody's going to go, no, dude, you don't have that money. You're like, crap, I never should have given everyone my checkbook. So that's what a blockchain-based system is. Now, a blockchain has been, this is almost right. I would probably refine it. I would say that a decentralized or distributed ledger is that. It's a digital ledger that records transactions across many computers so the record cannot be altered, because a blockchain is based on, like, that term is based on Bitcoin, where there are blocks of data and they are chained together, hashed, right? And in every time interval, in Bitcoin's case, 10 minutes, another block is stacked on top with that 10 minutes current transactions that are ordered. And so that is a chain of blocks where if you make any adjustment to any of the data anywhere, it would corrupt the entire record so that it instantly people would go, oh, you're trying to pull a fast one. You're trying to double spend. So that is a blockchain. And the cool thing about a blockchain is it can be data mined. You can go and research every single transaction that's ever occurred, ever, which is pretty badass. So, but not all data structures are blockchains. So in that one, this is a little bit too basic. There are DAGs, directed acyclic graph structures. There are gossip protocols. There's all sorts of different kinds of data structures that aren't specifically blockchains, but it's kind of a big catch-all term. All right. DeFi, decentralized finance, financial services that operate on a blockchain or distributed ledger system without traditional intermediaries like banks. These include services like lending and borrowing and trading and earning interest and providing liquidity. So these are decentralized financial terms, DeFi. What are smart contracts? You hear this all the time. Oh, it's a smart contract platform. What the crap does that mean? Well, smart contracts are self-executing contracts with the terms of the agreement directly written into the code, which is pretty cool. One of the neat things they're doing with like the crypto ring is they're having like SAFT agreements and things like for investment in the ring when you get it. Like that's your agreement is like in there. That's pretty badass. Anyway, smart contracts auto execute when certain conditions are met. You say, well, how do they do it if they're self-contained? Well, they have oracles basically trusted oracles so they can communicate with the outside world to see when different conditions are met. Yeah, so there you go. All right, non-fungible tokens, NFTs. These are unique digital assets that represent ownership or proof of authenticity of a particular item. They're often used for digital art, music, in-game assets, baseball cards, anything like that. Anything that you want to assign digital uniqueness to. I don't imagine it's going to be too far into the future where we're going to be using these non-fungible items a lot more. Checks, tickets, like all of the, you can think of all sorts of ways, medical records, things like that. So the best way to kind of fungible means tradable. Like if someone hands you $10, you can give them $10. A $10 bill is fungible. A $10 bill with a serial number on it, if you tell someone I'll give you $10, but you got to give me that same serial number back, you've just made that $10 bill non-fungible, because they can't just give you any other $10. It's got to be that $10, that one, that document. And that is non-fungible because there's only one with that serial number. So when you take a digital element and you serialize it, you ascribe a unique number to it, you create provable uniqueness, provable authenticity. And that becomes non-fungible or non-tradable. Okay. What a weird word, fungible, fungible. Anyway, digital wallets. These are tools that allow us to store and manage our crypto assets and, various other digital assets. In some cases, also NFTs, things like that, non-fungible assets in one nice, clean little place. MetaMask so far is my favorite of these digital wallets. There are many others, but MetaMask to me seems to be the overall easiest to use. And Cardano has a good wallet too. The Lace wallet's actually pretty nice. I don't use it that much, but I've got it. All right. Mining. Mining is the process of using compute power to solve complex mathematical problems that validate transactions and add them to a blockchain. And this earns you some cryptocurrency as a reward. Now, it could be direct or indirect. You can have an elected representative do the mining for you, like in a proof of stake protocol, where they're doing the work. You have elected them as your representative, and you do that by giving them, by taking your tokens and either pointing them in their direction or putting them under their control. They use that kind of relevant rank or score that you've given them by all these people casting their kind of tokens as votes. And they do that to resolve transactions in the ecosystem, and they earn fees and they earn staking rewards, which they then distribute to their supporting community. That makes sense. So that's kind of cool. This is where we get into staking. And this is participating in the operation of a distributed ledger or blockchain-based system by holding on to a certain amount of crypto assets or currency, or delegating or directing them as votes to support network operations. It earns you rewards in return. Yay. Then we talk tokenomics. This is the economic model and structure of a cryptocurrency or token, including its supply, distribution, incentives, ownership structure, things like that. Who owns what and when they're going to sell it? Tokenomics. And then, the lesser, kind of more spammy aspect of DeFi, which is yield farming. And this is a strategy where users, investors, whatever, gamblers, lend or stake their cryptocurrency to earn interest or rewards in the form of additional cryptocurrency. But remember, nothing in life is free. There is risk associated with that. So there can be all sorts of losses stemming from yield farming. Some are paper losses and some are real losses. Like the whole impermanent loss issue where you're on one or the other side of a liquidity pool and one side of it gets hit. And so you end up with a whole bunch of the cheap one left. So while your net value hasn't decreased, the amount of each asset that you own has changed based on whatever arbitrage occurred in the yield farm. And yes, yield farming is different than staking. Staking is supporting the network, okay? Supporting a network, helping to promote transactions, either through a representative like a stake pool, or through directly posting your tokens into a pool where there's that, and there can be all sorts of slashing penalties and things like that. But that's staking. Staking supports the propagation of transactions. Yield farming does not. Yield farming, you're just making up part of a pool of liquidity. And every time there's a transaction, you get a little piece of it. But you can do good or you can get beat up. If you stay in long enough, the idea is that when markets are quiet, but there's a lot of transactions going on, yield farming might make sense. You provide liquidity, you get paid little fees. It's something to do when nothing's happening. Almost always, if you're in a liquidity pool with one good asset and a stable coin, stable coins are stable for a reason. If the asset appreciates in value, because it rebalances these pools, you're going to end up with less of the appreciating asset and more stable coin or more of the other asset. And so in the long run, if something were to take off, you would not experience the benefit of that gain. So that's that. So anyway, you want to have a solid foundation in both traditional and digital finance. You just want to make sure you're not grappling with any of these things. Finance is evolving a lot. Crypto finance is evolving a lot. They're kind of starting, hopefully, to melt together a little bit, which would be great. But when you are managing your own money or carving out your own career in finance, stay informed. Try to adapt relatively quickly. Don't fight so much when new stuff shows up. Just go, okay, I guess this is the way it is. Don't bend and tilt every time any little change happens, but just kind of absorb and look at the landscape, try to live, 12 to 18 months out into the future. Spend your mind should be out there. Your mind should be 12 to 18 months from now. And then your investment decisions now just look a lot more clear and easy. So yeah, there's that. Okay. Now you're not going to sound so fintarded. We don't want any fintards. Let's see. Do you think the BRICS killing of the dollar will damage crypto market? No, because the BRICS are not going to kill the dollar. If you take a bunch of crap countries where everyone's scared to invest in their debt, just merging those currencies into a single currency doesn't change things. Did the euro usurp the dollar hegemony? No. Did the pound sterling? No. This exorbitant privilege that you have by printing the world's currency is not much of a privilege, and it turns out most other countries don't want it. This is mostly small countries. Well, not all small. Again, we did a whole show about the BRICS currency. It was never meant to be a currency. The guy that wrote this, it was just a thought experiment. What if, based on population growth and technological innovation, because these countries mostly were behind the times, and as they come up to speed, what if they all worked together and created and by the way, the S wasn't even part of it. It was BRIC. So it's anyway, the BRICS aren't going to kill anything. Now, I do think, BRICS currencies like ASI. It's funny. I was thinking that while I was saying it. I do think this. I think that as the world goes more digital, if you had the entire world was running their own central bank digital currencies, then dollar hegemony becomes a weird thing because it's no longer, it's not like there's the dollar. It's like, it's a basket. And in the basket, they all hold different percentages, right? So I think you would see a future where, because you would have settlement occur so much faster, and you could swap into other currencies very easily with less stress. Having less stress and more swappability and more transactability would make it where the currencies that did the best were based on the countries that had the best performance. Like, countries would look more like companies at that point, and currencies would look more like stock in those. I think that's what it's going to look like. I mean, again, I'm just talking out of my whatever, but that's kind of the way I look at it. So I think a lot of this dollar hegemony stuff will start to resolve itself when the world, when all of these countries are using their own digital asset. That's my thought. Anyway, that's all I have to say about that. But yeah, I don't see a future where BRICS anything kills anything. Some of these countries are trying to avoid sanctions. Some of these countries are getting beat up because they have dollar-denominated debt. They'd like to do business in other ways, but what are they going to hold? Where are they going to go to park their profit? They're going to go to the U.S. debt markets. They're going to go to U.S. government debt. They're going to go to repo, directly or indirectly. So it's like they can say whatever they want. None of these countries, because remember, if you're the one that has the world's reserve currency, you not only have to have enough money to support your society and your ecosystem and all of that debt finance crap that goes along with it, but you have to create enough liquidity for the rest of the world. So you're going to run ever increasing deficits all the time. There's no way out of it. So who wants that? You think the Chinese want that? Hell no. You think the Russians want that mess? No, sir. So they can all say what they want, but none of them actually want that exorbitant privilege. Anyway, let's see. Another, could you give us more information on ordinals? No, that's a Brandon thing. I don't give a shit about ordinals. I think that, I just think it's much ado about nothing. I think it's another less interesting NFT spammy bullshitty little pastime for 16 people. I just don't think it's that interesting. And I don't think that Bitcoin has the bandwidth to do some of the novel things that some of these D-bags are trying to do. So it's kind of a spammy cash grab. So no, I will not talk about ordinals because I just don't think it's that interesting. And I think it moves you away from thinking about things that are interesting. And it in no way will improve your understanding of finance. There's nothing in the entire pantheon of ordinals that will teach you anything about the economy. There. Let's see. Ryan says, wanting to swap AGIX for HYBC. What's your, the best way to do it? The best way to do it is Uniswap. That's the best way to do it. But yeah, I mean, the only MetaMask is going to hit you with an extra 1% fee. That's about it. Otherwise, it's not that bad. But you're going to have more options at Uniswap with probably lower fees. That's what I would say. All right. Stay in school. Don't do drugs. Don't do anything my poor insolvent drunk, struggling meth grandmother or Brandon wouldn't do. I don't know. Sleeves, no sleeves. It's getting near the summer. I would imagine he's got no sleeves on. It's warm, nice day. We got markets are good and stuff. So go slow. Don't be stupid. Don't do what grandma would do.